How are you? Pat Mannix, the tax champion, here for the 22-23 budget. And how quickly is the budget coming around these days? I'm pulling out this orange shirt more than a surfy in the 70s and the Barguan in the 80s, but here we are again, and here's some goodies in store for you. Let's concentrate on the self-funded retirees first, and those people drawing on their superannuation. So the government's come to the party again and is making a 50% drawdown on your minimum super in your pension as a normal way of drawdowns for the 2022 year. So these are the amounts that you can draw down as a minimum. If you're between 65 and 74 years of age, your minimum drawdown will be 2.5% of your balance. And then if you're 75 to 79 years of age, it's 3% of your balance. From 80 to 84, 3.5% of your balance. From 85 to 89, it's 4.5%, and 5.5% for ages 90 to 94. So self-funded retirees, you only have to draw down half your percentage, and that's what's been put into the budget for 22-23. Now, small business people, there are some goodies in store for you. There's some stuff around cash flow, and there's some stuff around training and technology. So listen to these goodies closely. First of all, let's look at the cash flow side of things. So from a cash flow perspective, people or businesses with PAYG and GST installments. So they are those quarterly installments which you need to pay for the current year's tax that you get sent by people like us accountants. The rate will be 2%. So there'll be a 2% uplift on PAYG and GST installments for the 22-23 financial year, which is significantly lower than the 10% that's sitting in the statutory formula. Okay, so usually when you do your tax, the tax office sends you a form to pay your next quarter for the next financial year, and they uplift by 10%. They are dropping that to 2%. So that's a really good thing for small business on GST and for income tax installments too. But wait, there's more for small business. Here's another little gem. If you spend more on technology, let's have a look at that. So technology, under the technology investment boost for small business, for businesses with aggregated annual turnover less than 50 million, you'll be able to deduct an extra 20% of your deduction on digital uptake. What that means is that you'll spend $100 on technology and the government will give you a $120 deduction. Talk to your tax accountant about the cash value of that, but there's value there and they want you to spend on technology. And these are the types of things they're looking for you to spend it on. They're looking for you to spend it on stuff like cloud computing, e-invoicing, cybersecurity, web design, those sorts of things. And they want you to start to spend it and spend it between now and in a couple of years' time too. So that's looking like a real bonus for small business. The other little kicker they've put in is small business who are trying to train their people. What a deduction that's going to be. Training your people, your greatest asset. There's an extra bonus in there too for small business with $50 million turnover or less. And this is it specifically. So small business will have access to a bonus extra 20% deduction on external training courses delivered to their employees. Okay, and that's in the budget as well. Now here's another little one for startups, businesses we love, people who take risks in technology, etc. For startup businesses, there's some changes for employee share schemes. A lot of the startups will be interested in this. So employee share schemes, what is happening in the budget? Well, what's happening is that the government is now going to allow employers, so those startup companies, to make larger offers in connection with their employee share schemes in unlisted companies. So participants, so employees, can invest up to $30,000 per year, and that's accruable for unexercised options for up to 5 years, plus 70% of dividends and cash bonuses. Now that's up from $5,000 per year, folks, to $30,000. It's getting right up with how the rest of the world deals with startup companies. So have a look at that and talk to your tax accountant about that one too. Now, for the average punter out there, there's a few little goodies as well, which I can go through now. First of all, the petrol excise, they're going to cut that in half. So those terrible, that terrible man Putin over there getting stuck into the Ukrainians, terrible guy he is, he sent the price of petrol higher, and they're going to cut the excise, the Australian government, from basically 44 cents down to 22 cents for the next 6 months. So that's a little bonus there just to help at the petrol pump for all of us. The second one we're looking at is for the extra tax offset. So this is an important one, folks. The government is increasing the cost of living tax offset, or the low and middle income offset, LMITO, up $420 to a maximum of $1,500. And that is available for people who sit in between $48,000 in taxable income and $126,000 in taxable income. And that is the extra tax offset that you're going to get for people in those tax brackets. That's it, folks. Punchy, to the point. There's something there for business. There's something there for individuals, something for self-funded retirees. Have a look, talk to your tax accountant and get hold of these changes, because they're good for business in a tough environment out there. See you next year, or before, with the orange shirt.